We will be bringing you an update on national employment. The data will be out any second now. Let's bring in our business editor, Ross Greenwood. He's live for us in Sydney. What's the expectation here, Ross, around these July numbers?
In fact, this number has just dropped and the unemployment rate in Australia has risen from 3.5% to 3.7%. So that has just dropped in the last couple of seconds. We're going to find out more detail as to what's taken place. The markets had expected an extra 15,000 jobs would be created. In actual fact, what we're seeing is employment has actually fallen during this month. 14 million people rather. The amount of employment, full-time employment, fell by 24,200 during the month. Part-time employment increased by 9,600. So just a little headline here is that these numbers have deteriorated worse than what had previously been expected. Now, the other interesting aspect of this is just looking up at the participation rate. Effectively, that's also fallen. So while we'd had almost record numbers of people in the workforce, that's starting to ease off, which plays into the rhetoric of the Reserve Bank to a certain extent, you'd have to say. But just to repeat that the unemployment rate in Australia has increased from 3.5% out to 3.7%.
Okay, so what does that mean for the Reserve Bank? How would the RBA read those numbers, do you think?
The Reserve Bank will read these numbers in some ways probably saying that their strategy of raising interest rates to try and quell the economy is working. Now, effectively, it's forecasting that the unemployment rate needs to rise perhaps out to 4.5%. There's no, sort of coincidence here that while you've got the Labor Party conference on, they're trying to keep as many people in jobs as they possibly can. But what the Reserve Bank says is that ultimately the unemployment rate will need to rise, probably out towards 4.5%, to try and get wages and inflation back into balance. You can see some of the key statistics here, and that is the unemployment rate there at 3.7%, the 14.6 or 14,600 jobs that were lost during that period of time. Coincidentally, the number of hours worked has actually increased during that period as well. So it might suggest also that right now many employers who themselves are feeling the pinch are starting just to ease back on the number of hours or even in the job vacancies that are out there in the marketplace.
Okay, what about the markets? Are we seeing any reaction there yet?
Let's have a quick look. We can have a look almost immediately and see what's taken place as a result of this. Here's the ASX 200. You can see it's rising a little bit from where it was. It had been down 80 points. It's now down by 64 points as a result of this, but still down pretty heavily as a result of sell-offs overnight in the United States. Have a look at the Australian dollar. It's fallen significantly, almost by 1/5 cent since this number came out. It had been sitting around 64 cents. And because of now the prospect that the Reserve Bank will not touch interest rates at its next meeting, it's now fallen by about 0.75%. And here's government bonds on the markets today. These are short-term government bonds that sort of closely match the Reserve Bank, and they also are just a touch lower since this number's come out. They had risen initially, so really that's the market reaction. It is something of a surprise, but pretty much in line with where the government, Treasury and the Reserve Bank expect the trajectory of the unemployment rate over the next 12 months.
Ross Greenwood with that breaking news and analysis. Thank you so much.